The last time we spoke, Brent was trading at $58. You see it here. It's 27 and change, about half its value. Many people in the market, including you, thought we'd get this OPEC deal to stabilize prices. What do you think the market misread here?
Well, in terms of the change is pretty tumultuous. You know, we've had a market that was expecting supply cuts, and instead we've got supply increases and a dramatic change in demand. So, you know, the market's reacting to that abrupt change, and the price has come off. Demand today, we think, is down significantly, 15 to 20 million barrels per day at its peak over the next few weeks. Which is going to contribute to an approximate 5 million barrel a day decline for the year when we annualize that out. So it's pretty huge in terms of anything we've had to deal with before. 15
to 20 million sounds like a lot more even than what I'm hearing from some people who thought it'd be 10 million barrels lost on the demand side. That is quite significant. It seems like the supply story is almost being sidestepped now. With that kind of demand weakness, where do you see prices going from here?
Well, I think the numbers have adjusted slightly because obviously the news keeps flowing, and India is a massive economy, and they contributed this week to a lockdown, which in turn means substantial loss of demand in India as well. Where do we think things go from here? Well, there's a lot of oil in the market, and there's a lot of stocks that we're going to have to build because it's not going to get consumed. Right now, product inventories are building in the US and in Europe and in India, and refineries are going to have to cut runs. So we think refineries have cut by about 7 million barrels a day so far, but they're going to have to go a little bit further in order to bring products back into balance. There's a bit more storage in the world for crude than there is for products, and so it's a little bit easier to deal with it in the crude market. But the crude market storage is going to fill up pretty quickly as well, which again we think will ultimately lead to a little bit more pressure on price and structure.
Do you have a number where you'd think you'd see Brent or WTI?
Well, I think we probably do have to drift down a little bit lower from here. The problem, the demand halt that we've seen is really only hitting the markets now. So people are beginning to deal with it, and it's very unusual circumstances because, you know, a lot of companies are working from home. You know, it's very difficult to coordinate such a dramatic change. So I think decisions are naturally happening a little bit slower than they would happen if everybody was sat in the office. So I think those decisions are coming this week and next week, and we'll begin to see what people worrying about the next couple of months of both demand and where the oil's going to go.
You mentioned storage. It feels like everyone just wants to almost hoard the crude at these kind of prices. When do you think we'll see full capacity on storage and reach tank tops?
Well, you know, if you do the maths and if we have lost 20 million barrels of demand for a month, you know, that's 600 million barrels of oil that has to go into storage. So there isn't really that much storage available. I think our estimates are something like 300, 400 of capacity around the world that will fill up pretty quickly. Very quickly on products, and soon after that crude, and then the market hits a wall, and then producers have to make decisions about whether they want to carry on pushing oil into the marketplace when there's not really the demand to take it. You know, what we don't know is when this situation is going to improve from a demand perspective. You know, is it a month? Is it 2 months? Is it 3 months? You know, and I think obviously everybody's taking a slightly pessimistic or conservative view of that demand's going to be down for a decent period of time.
What about floating storage? Do you find that is working right now?
Yeah, I mean, people have jumped into the market and taken ships for storage for different reasons, and I think that will continue. Partly because, you know, if you're loading oil in April, it's not that easy to place it right now because obviously everybody's dealing with their own supply chain problem and reducing refinery runs.
And I just wanted to ask you how Vitol is weathering this price crash. I mean, it's unprecedented, these moves we're seeing. How has the past month been for your P&L?
Well, we had a very good and strong 2019. So we came into 2020 with very little leverage and a very strong balance sheet. So the first thing was to get everybody working from home and organised, and we've done that. The next thing is to deal with all the little problems that exist around the world. You know, port quarantines, ships needing to wait to go into customers because of 14-day quarantines, things like that. And then the next phase really is adjusting the business for the situation that we're in. But we're in very good shape, and as I said, very little leverage, which in the longer term gives us some hope that we can look at some of the opportunities out there once we've got through the next 2 or 3 months.